We're living through a truly transformative time in human history, a technological shift into an age of information that will allow people to take control of their finances, their future, and their freedom. The best way to achieve this is cryptocurrency. You might wonder, why crypto? Well, it's easy. Cryptocurrencies such as Bitcoin are digital currencies, not backed by real assets or tangible securities. They are traded between consenting parties with no broker and tracked on digital ledgers. One of bigger names in crypto world right now is Raoul Pal. He is an entrepreneur, economist, and investment strategist, and former hedge fund manager who retired at the tender age of 36 on a quest to spread the word and provide information about financial sector to a wider audience. In an interview he gave back in 2020, he talked about Bitcoin being a better investment than Ethereum. Of course, he didn't say anything bad about Ethereum, because in recent interview, he said that Bitcoin and Ethereum are going 100 times and even 200 times in the next 5 years. Well, we can only hope for that.
If I was a conservative, I'd say 150,000. If I'm to be realistic, knowing what I know about the flow of funds, I think I have a feeling that Plan B's model is going to underprice the upside. I know everybody thinks on this cycle the price will be lower. I just don't see it because the amount of money coming into the space. So I actually have a feeling it might be above his target of about 250,000. But I don't know. But I like that optionality. You know, worst case 150, best case north of 250. I mean, find me another trade in the world that looks like this. Ethereum has a whole bunch of other things, and the Ethereum 2.0 and the staking and taking coins off the market there. There's a lot of positives and the amount of development that's going on in the DeFi space. But the easy trade is follow the money. We get to front run a wall of money. Now with Ethereum, we don't know that that's coming. It has other things that will drive the economics, and the Bitcoin price rising is one of them. So Bitcoin itself is, and I've been talking about this, is basically eating every other asset class for lunch. It is outperforming everything. It's even outperforming Amazon now. So interesting enough, how I did this was I chose Bitcoin and Ethereum, and I switched, I started with Bitcoin, I then added Ethereum, I then switched. Then I just did an equally weighted basket of a bunch of all the other protocols, DeFi, other stuff. So whatever ends up appreciating the most at any one point will have the highest weighting. But I've not made a macro bet on a single other one. Then I've started taking macro bets on social tokens, but these are smaller, less liquid things. So you can't take a huge value of your portfolio because it's very early. So as a risk thing, I'm like, yes, I want some social tokens and I want a bit of the metaverse too. So that's how I've constructed it. So I don't have any difference in weighting in my head between Cardano, Polkadot, Aave, any of this stuff. And they're all different things, different use cases. But I said, look, I don't know, I'm not smart enough and it's not my job. I mean, I don't do it with the S&P 500. I'll just buy the market if I'm trying to express the market view. I don't really do care about the social stuff, but I won't talk about what I'm doing in it because I don't want to be that guy. The piece of advice is, what do you want out of it? What are you looking to do? How old are you? What is your risk tolerance? Are you looking to learn? Do you want to figure out how markets work and this looks interesting to you? Well then, decide, okay, in that case, don't go all in. Just put a bit of money in and get a feel for it. Get an understanding of what these different things are, what project really works for you, and enjoy the process of learning, losing money, making money, being the dumbass, and then thinking you're a hero and then realizing you're not. All the things that every person who ever invests has to go through, do it and enjoy it. And if you can write notes so you actually learn, really, really useful. If on the other hand, you're saying, okay, what I want to do is I want to get exposure to this space because I want a long-term investment. I want to build a significant thing like I would have done to my 401k or in addition to my 401k, then that's a different conversation. Then what you would do is start looking for portfolio allocation, which is, okay, safety first. You want the highest quality product with most of your money in it. So that would be Bitcoin. And then you probably want Ethereum, a decent size because the network effect and its use cases are so enormous. And then after that, you start thinking like I'm thinking. It's like, what do I know about the next part of this? Do I have any informational edge? Do I just buy the Bitwise 10 and just do that? Is that a smarter way of getting that investment? Probably. And then maybe in a couple of years' time, when you're starting to understand areas that really excite you, it might have been DeFi, it might be social tokens, it might be anything, it might be NFTs, that you can start then allocating a bit more of your own money into those bets. So that's how I play it. It really depends what kind of thing you're trying to get out of it. You can get both out of it as well. You can put your regular dollar cost averaging plus a few lump sums in as you go, and you can have a trading account and lose all the money and be the complete ape. And that's okay. You can be both. How can I maximize the return out of my $1,000 without losing it all? So will Bitcoin go up as much as Ethereum over this cycle? I don't know. Oh, are either of these going to go to zero? No chance. You know, can I write my $1,000 off and say, I don't care, I'm going to flip it into Doge? Fine, you're just speculating. So, you know, there is no get rich quick. It doesn't work in this world. That's just pure gambling. And you might as well just go to Vegas with your $1,000. Now, so the answer is, you can never approach it that way. Obviously, we all play around this with our minds, right? The answer is, it depends what it's worth. Because I've got a few things that I need to spend in fiat. And, you know, I would like to do that. So it depends what it's worth as the percentage what that will be. But there'll be a bunch I will take off to do some stuff in my normal life. And then I'm thinking, okay, do I keep it all in the tokens, or maybe have I got enough money that I can spread it around some hedge funds and some longer term bets? You know, how do I dampen the volatility over a potential down cycle? You know, so I think I would have urged towards taking more of it off. But the more time I spend in this space, the less I think I'll take a lot of it off. I'll just try and structure it in ways that allows me to earn some yield, not worry about it, think about it, make sure I've got the fiat money, the dollars that I need to do the things that I need to do or want to do, and the rest, let it go, because this ain't stopping. This is the fastest adoption of any technology in all recorded history. It's growing at twice the speed of the internet with the same number of users back in 1997. And we go from 140 million users now to 1 billion in 2024. Right, so, you know, that's an 8x in users. If you extrapolate it out, we get to 3 billion pretty fast. And if you look at the other size of other asset classes, the major asset classes, between 100 trillion and 300 trillion each. This is current 1.5 trillion. It sounds like to me it can go up 200x from here, or call it up 100x. Let's be conservative. So kind of the ups and downs all part of it. Take care, and thanks very much for having me on.